Yo guys, I hope you're all doing well. I just got another example to show you guys where you can actually combine my strategy with institutional concepts to get amazing risk to rewards. In fact, I actually managed to catch a 1 to 10 overnight, and I'm going to show you exactly how I did that using my strategy. Okay, so obviously with the strategy, the first step is to identify a trend in market, and as you can see, we're in an uptrend, higher highs, higher lows. I'm just going to draw a general trend line, just something very simple and basic. And then what do we do next? We wait for the break of the trend line. So let's wait and see where the market breaks, if it actually does break, and boom, it's just broken over here. Then obviously the next steps are to look at the simple moving average, which should have turned white, which it has. And we want to see that the two moving averages cross over. So let's just go ahead a few candles and wait for that crossover to take place, which is about to happen any second now. Boom, they've just crossed over. Now, first of all, what I can see is that there's a bunch of liquidity that's been built up right underneath, right underneath these candles. There's a bunch of liquidity that's been built up, so that the market has actually attracted a bunch of buyers, knowing that long term they're going to be pushing the market down, okay, and taking out everyone's money. Now we know this because of our strategy. So our bias is that we are going to look for the sell move. But as institutional traders, we don't just want to sell from anywhere. We want to get the best possible entry so we can get the best possible risk to reward. So what I'm going to do is I'm just going to dive into the 5 minute to identify and see what's really going on in the smaller time frames and where we can actually, maximize ourselves when it comes to getting the best entry possible. So first thing I can see is there's a bunch of liquidity for sellers being created here as well, and you have to think why that is. If long term the market's going to go down, do you think that the buyer wants to take a lot of retail traders with them? Absolutely not. So they're going to try and take them out, which matches what it is that we're trying to look for, because we're trying to look for an entry that is higher up. And if you look to the left, you see this weird looking bullish candle amidst all these bearish candles. Like, what is really going on here? You see, when I see something like this, alarm bells are ringing in my head. I'm trying to think, yo, that looks so dodgy. You see, that can only happen through market manipulation, guys. And so what we're going to do now is we're just going to dive into the 3 minute and try and really investigate what actually took place with that candle. Okay, so let's go and have a look. So the first thing I can notice is that this is known as a drop base drop, guys. So it's a very large bearish candle followed by a weird looking bullish doji followed by a very large bearish once again. So what I'm going to do is I'm going to enter on the open of that candle, the open of the actual, base candle, okay, which is basically an order block. And you have to think psychologically why I'm doing this. It's because when the market got pushed up at that particular candle, banks created this illusion of liquidity. I mean, sorry, not liquidity, the illusion of a support level, right? Why? To attract buyers, guys. You see what I'm saying? Look over here. I'm going to draw a little shaded area so you guys can see. Most people, when they see something like this, right? When they see something like this, they're going to look to buy because look, the market's rejected the area several times. So what has the banks done? The banks have actually attracted liquidity, attracted buyers to then push the market down and then take everyone's money. So knowing this, we know that, hey, the bank has buy orders stuck within that area, okay? Because if the market is going to fly down, the bank is going to be in millions and millions of pounds of drawdown. And we know that the bank's weakness is that they can't lose money, okay, guys? So we're going to capitalize on that fact and we're going to try and enter at this area, and we can see very clearly that it hasn't yet been mitigated, guys, okay? So we've got our entry. What about our stop loss? What I'm going to do, I'm just going to dive into the 1 minute time frame, and let's actually investigate on the smallest time frame possible, for me at least, what is actually taking place in that area. So just bear with me, guys. My system's moving a little bit slow. Cool. Now, obviously here you can see the little buy orders that have been, pretty much accumulated over here. However, at the top you see this little imbalance, this little inefficient price action, which is actually, some more alarm bells are ringing. Now, what I'm going to do just to play it safe, I'm going to put my stop loss on the fill of the imbalance, guys. I'm going to put it at the fill of the imbalance. So there's my entry, there's my stop loss. Now we just got to work out our take profit. So I'm just going to go head over back onto the hourly time frame and see where the market might be headed. Obviously, we do have that little area of liquidity that we had marked up right at the start. Let me show you guys real quick. Just bear with me, guys. Moving a bit slow. Cool. So you see here, there's that little area of liquidity that we marked up. So first thing, you probably could take that entry down to that area. And the other thing is I can see an area of liquidity right here as well. There's money available here from all the buyers really as well. So then I've got to investigate this area and just see what really took place over here too. Now, I'm going to go into the 5-minute time frame once again. I'm just going to dive in and we're going to try to investigate that area as well. So once again, bear with me guys. Laptop's moving a bit slow today. I think it's because of all the heat really. It's like keeps overheating. But yeah, just give me a second guys. I'm just going to go investigate that area right now. Just bear with me. Bear with me guys. Almost there. This is slow as hell, man. Alright, cool. Alright, you know what? Like, obviously, it's the area of liquidity, so we're targeting that area as a take profit regardless. I'm just trying to get the most pinpoint take profit, I guess. But you know what? For the purposes of this example, I might well just go ahead and put my take profit pretty much at the area of liquidity. So the final sell to buy candle, I'm not going to investigate it too much. I know that as the market went up, these sell candles, right? You see these little bearish candles, the sell candles, they're stuck. They're stuck within the market. The banks are in drawdown. They haven't been mitigated, right? So I can easily go ahead and, take profit pretty much at that sell candle, the little sell to buy candle over there. So with that being said, what we're going to do now is we are literally just gonna, get our short position out. We're gonna work out the risk to reward and we're gonna see how this trade goes. Okay, so here's our entry point. Okay, take profit is down here as we've worked out, which is fine. And then our stop loss is gonna be right here, guys. Cool, cool, cool. So it's a nice little 1 to 8. I think I might have had a little bit of a tighter stop loss when I did it, but anyways, a nice little 1 to 8. And you know what? Let's see what happens. So I'm just going to click play and we're going to watch what's happening. So all that liquidity has been built up. Bang! All the sellers get taken out. We catch a sniper entry, guys. Now all the buyers, they need to get taken out next, right? See all this liquidity over here? They're next up, okay? And that's good for us because we're in the move. So we're going to try and catch the move down. Let me just extend the position. 1 second, guys. Cool. And yeah, let's just see how the move goes and if we make it or not. So here we go. Boom. All the buyers are taken out as well. And we end up smashing take profit, guys. Look at that easy 1 to 8.5 risk to reward ratio. If I would have investigated it a bit more, to the left side, maybe I could have got even a better take profit. Like this had the potential to be a 1 to 10. But anyways, guys, with that being said, as you can see, the value of using my strategy with institutional concepts means instead of catching your 1 to 2s, you can go ahead and catch 1 to 10s just like I did last night. So with that being said, I hope that helped a lot and I'll see you guys on the other side. Peace.